Motion in your step.
Motivation in your heart.
Hello, and welcome to today's Motion and Motivation podcast.
We've put together a study guide for everyone. If you need it, you can grab it from the video description.
Hey everyone, welcome back. Today we're going to do a deep dive into Morgan Housel's The Psychology of Money.
Oh yeah, this will be fun.
It's really fascinating stuff.
Yeah.
It explores the often hidden forces that shape our financial decisions. Like why do we do the things we do with money?
Right. And it's not just like dry financial advice.
No, not at all.
Housel weaves in these personal anecdotes and broader principles. It's really about the human stories behind the numbers,
Yeah, absolutely. And, he starts off by challenging our assumptions about what wealth really looks like.
Mm-hmm.
That whole idea that wealth is what you don't see.
Yeah, it's like we think of wealth as like, fancy cars and big houses.
Exactly.
Yeah.
But he uses this example of this guy named Roger,
Oh yeah, Roger.
who seemed to have it all, right?
Yeah.
Designer clothes, the Porsche.
The whole 9 yards.
But then one day, he shows up in this beat-up Honda, and it turns out his Porsche was repossessed. Yeah. All that outward show of wealth was actually built on a foundation of debt.
Yeah. It's a good reminder that you never really know what's going on behind the scenes,
Right. And then he contrasts that with the story of Ronald Reed.
Oh, Ronald Reed. Yeah.
The unassuming janitor who quietly amassed an $8 million fortune.
Amazing story.
Incredible, right? Nobody knew he was wealthy because he lived so frugally.
Drove a used Toyota, wore simple clothes, clipped coupons.
Clipped coupons.
The whole bit.
It's like the ultimate example of stealth wealth.
Yeah, it really highlights that real wealth is often hidden. It's about building those financial assets, not just accumulating stuff.
Okay, let's unpack this a bit further. Why do we fall into this trap of equating spending with wealth?
Well, I think it's partly because we're wired to judge by appearances,
Right.
We see the fancy car, the big house, and we just assume wealth.
Right.
But we often miss the real story, the financial stability that comes from saving and investing wisely.
And this misconception can lead to some pretty bad decisions, right? Like trying to keep up with the Joneses.
Oh, absolutely.
Racking up debt in the process.
Yeah, it's a reminder that we need to be mindful of our spending habits and focus on building true wealth, not just the appearance of it.
So how do we shift our mindset? How do we start thinking about wealth in a more meaningful way?
Well, I think it starts with understanding the power of compounding. This is where Housel really dives into the magic of long-term investing.
Right.
He contrasts the stories of Warren Buffett
Okay.
and Jim Simons.
Okay. I know Warren Buffett, legendary investor, but who's Jim Simons?
So Simons is this brilliant hedge fund manager. I mean, he actually achieved even higher returns than Buffett.
Wow.
But the key difference is time.
Okay.
Buffett started investing at a young age, giving his money decades to compound. Simons started later in life.
So even though Simons had higher returns, Buffett's wealth grew exponentially because he had more time on his side.
Exactly. And it's like that saying, the best time to plant a tree was 20 years ago. The second best time is today.
I love that.
Yeah. It's never too late to start, but the earlier you start, the more that compounding can work its magic.
So the lesson here is that starting early and being consistent are crucial.
Yeah. And we often underestimate the power of compounding because we're wired for linear thinking. You
Right.
think, like, if I invest $100 today, I'll make $10 next year. But that's not how compounding works. It's exponential growth. The gains build upon themselves over time.
It's like that example Housel uses about data storage.
Oh, yeah.
We went from kilobytes to megabytes to gigabytes.
And now terabytes.
It's
It's
how-
mind-boggling how fast that growth has been.
Yeah. And it's the same principle with compound interest. Those seemingly small gains can snowball into incredible wealth over time.
Okay, I'm starting to see the light here, but there's another point Housel makes that really intrigues me. The idea of enough.
Oh, yeah.
Like when do we have enough? That's the million-dollar question, right?
It is.
Well, he shares this story about John Boyle, the founder of Vanguard,
Okay.
and Kurt Vonnegut at a party hosted by a billionaire.
All right.
And Vonnegut observes that this billionaire, despite all his wealth, never had enough.
It's like the age-old question, right?
Mhm.
When is enough enough?
Yeah, we're constantly striving for more, but does it actually bring us more happiness?
Good question.
Right. And Housel introduces this concept of the hedonic treadmill.
Right.
where our desires keep escalating as we achieve more. We get that initial rush of satisfaction, but then we adapt and start chasing the next bigger thing. It's a never-ending cycle.
It's like we're running on a hamster wheel, always moving, but never really getting anywhere.
Exactly. And he illustrates this with a cautionary tale, the story of Rajat Gupta.
Who's Rajat Gupta?
So Gupta was the CEO of McKinsey, this global consulting firm.
Okay.
He was incredibly successful, wealthy, even involved in philanthropic work with Bill Gates.
Wow. So by any measure, he had enough.
He did, but
Yeah.
but he wanted more. He got caught up in insider trading, risking everything for just a little more.
Oh, wow.
He ended up losing his reputation, his fortune, and even went to prison.
It's a stark reminder that that the relentless pursuit of more can be incredibly destructive.
It really makes you think, right? Like, what is our definition of enough?
Right.
At what point are we content with what we have?
Yeah. These are questions worth pondering.
For sure.
Okay, let's shift gears a bit.
Okay.
And the Halsell also digs into the often overlooked roles of luck and risk in financial success.
Yeah, that's a big one.
He tells the story of Bill Gates and his childhood friend, Ken Evans.
Uh-huh.
Both were brilliant computer prodigies.
Mm.
Gates went on to co-found Microsoft and become one of the wealthiest people on the planet.
Right.
But Evans tragically died in a mountain climbing accident as a teenager. It's a sobering reminder that that life can be unpredictable.
Yeah. You never know what's going to happen.
Absolutely. So Housel's point is that even with talent and hard work, luck plays a role in shaping our outcomes.
Mm.
It's almost impossible to separate skill from luck when we look at financial success stories.
He quotes this Nobel Prize-winning economist, Robert Shiller, who asks, "What do you want to know about investing that we can't know?"
It's a powerful question. It highlights how much is simply beyond our control.
Right. Like, we can make plans and strategies, but there's always going to be that element of the unknown.
Absolutely.
And then Housel contrasts the stories of Jesse Livermore,
Okay.
a legendary stock trader who made and lost fortunes multiple times, and Abraham Germansky, a real estate developer, wiped out in the 1929 crash.
So both experienced incredible success and devastating losses.
Right. I mean, Livermore's story in particular, it underscores the fleeting nature of wealth without a focus on risk management.
Okay.
He made brilliant trades, but also took enormous risks that ultimately led to his downfall.
So it's a reminder that that building wealth is one thing, but preserving it requires a different set of skills.
Yeah, I think that's a really important point. It's not just about making money, it's about keeping it and making it work for you over the long term. And, another example Housel uses is Rick Guerin,
Okay.
who is like part of Warren Buffett's inner circle, really brilliant guy, just as sharp as Buffett and Munger, but got wiped out in the 70s.
Oh, that.
Over leveraged.
Meaning he had borrowed too much money to invest.
Yeah, exactly. And when the market turned against him, he was forced to sell his Berkshire Hathaway stock back to Buffett at a fraction of what it would later become worth.
Ouch.
Yeah, a painful lesson in the importance of managing risk.
So if surviving those inevitable market downturns is key, what are some strategies we can use?
Well, Housel highlights a few things. Focusing on your savings rate,
Okay.
building a margin of safety into your financial plans,
Okay.
and cultivating a mindset that balances optimism with paranoia.
Optimism with paranoia. That sounds like a bit of a contradiction.
It might seem that way, but it's about being optimistic about the future while also being realistic about the risks and setbacks that are bound to happen. This balanced perspective allows you to stay the course during tough times without losing sight of your long-term goals.
I see. It's about being prepared for the unexpected without letting fear paralyze you.
Right. And it ties into another concept Housel explores, the end of history illusion.
Okay, I'm intrigued. What's the end of history illusion?
It's this tendency we have to underestimate how much our desires and goals will change in the future.
Yeah.
Like, we think we know what we'll want 5, 10, 20 years from now, but the reality is we change. Our priorities shift. What seemed important in our 20s might look completely different in our 40s.
Oh, I can definitely relate to that. I've changed so much over the years, and my goals have definitely evolved.
Exactly. And that's why clinging to rigid long-term plans, especially when it comes to finances, can lead to regret later on.
So how do we plan for a future when we don't even know who we'll be or what we'll want?
Housel suggests aiming for balance in different areas of life. Moderate savings, moderate free time, moderate work-life balance. This creates flexibility and reduces the chances of feeling trapped or disappointed down the road.
It's about having options. and the freedom to adjust our course as our values and desires evolve.
Precisely. And speaking of shifting perspectives, Housel dives into the seduction of pessimism.
Okay.
He uses this example of an article from 2008 that predicted the imminent collapse of the United States.
Oh, wow. Talk about a bleak outlook. I guess in the midst of the financial crisis, people were grasping for explanations, even if they were pretty extreme.
Right. But Housel's point is that pessimism can be very alluring, especially in times of uncertainty.
Why is that?
Well, for several reasons. First, negative events tend to grab our attention more than positive ones. It's just human nature.
Yeah, it's like that saying, if it bleeds, it leads.
Yeah.
Bad news sells.
Exactly. And second, economic bad news tends to affect everyone. So it seems more widespread and impactful than, say, a hurricane that might only devastate a specific region.
Makes sense. When the economy takes a hit, everyone feels it in some way.
And finally, pessimism often plays into our existing fears and biases, making it easier to accept and spread those negative narratives.
But Housel also cautions against getting swept up in those doom and gloom predictions, right?
Absolutely. He reminds us that humans have an incredible capacity for progress and resilience. He uses the example of the airplane. Early on, it was met with skepticism and fear. People doubted its practicality and focused on the risks of crashes.
It's funny to think about that now, considering how commonplace air travel has become.
Right. It's a reminder that we often underestimate the power of human ingenuity and innovation.
Yeah.
While it's important to be aware of risks, we shouldn't let pessimism paralyze us or prevent us from pursuing opportunities for growth and progress.
So it's about finding that balance between being cautious and staying open to possibilities. Now, you mentioned earlier that we often believe anything when the potential rewards are high, especially in the realm of investing.
Yeah.
What did Housel mean by that?
He was talking about our susceptibility to financial fads and scams, especially when we don't fully understand what's going on. Like, he uses the example of the dot-com bubble in the late 90s. Investors poured money into internet companies with sky-high valuations, often ignoring basic fundamentals.
It was like everyone was trying to get rich quick, fueled by hype and speculation.
Exactly. And Housel argues that this tendency to believe anything is amplified when our understanding of the world is incomplete.
Okay.
We latch on to narratives that promise quick riches, even if those narratives are based on flimsy evidence.
It's like those get-rich-quick schemes that prey on people's hopes and dreams, especially during times of economic uncertainty.
Right. And it's not just limited to individual investors. Even sophisticated institutions can get caught up in these speculative frenzies.
So how do we protect ourselves from falling for these financial traps?
Housel stresses the importance of education, skepticism, and diversification.
Okay.
First, educate yourself. Develop a solid understanding of financial principles. Don't just follow the crowd.
Do your research, think critically, and don't be afraid to ask questions.
Exactly. Second, be skeptical. If something sounds too good to be true, it probably is.
If someone promises guaranteed returns with no risk, run in the opposite direction.
Wise advice. And finally, diversify your investments. Don't put all your eggs in one basket.
Spread the risk. Don't bet everything on one hot stock or investment strategy.
Now, you know what's funny? Thinking about all this talk of narratives and biases, it reminds me of that story Housel tells about the alien observing Times Square.
Oh, yeah. The alien who visited on New Year's Eve in 2007 and then again in 2009. What was it about again?
Well, the alien couldn't tell the difference between the two visits. The lights, the celebrations, the energy, it all looked the same. Despite the fact that in between those two visits, the world had gone through a massive financial meltdown.
Wow, that's a powerful illustration of how much our perception of the economy and even our own financial well-being is shaped by the narratives we're exposed to.
It's those narratives that often lead us astray. Remember the dot-com bubble we talked about? Everyone was pouring money into internet companies, convinced they were going to strike it rich. The allure of those can't-miss opportunities is incredibly strong, especially when you don't fully grasp the underlying mechanics.
And that's exactly what makes us susceptible to financial fads and scams. It all circles back to those three things you mentioned: education, skepticism, and diversification. Arm yourself with knowledge, question everything, and spread the risk.
Exactly. Now let's shift gears a bit and talk about something Housel calls room for error.
You mean like having a financial cushion, an emergency fund?
Yes, but it's more than just having some cash set aside for a rainy day. Housel frames it as a margin of safety. It's a broader concept that applies to all aspects of our financial lives. It's about recognizing that no matter how well we plan, life is unpredictable.
Unexpected expenses pop up, markets take a dive, job situations change.
Exactly. And if you're financially stretched too thin, those unforeseen events can be devastating. Housel uses a rather vivid analogy to drive this point home. German tanks during World War II that were disabled by mice.
Wait, what? Mice took out tanks?
Yep. Apparently, mice nested inside the tanks and chewed through the insulation on the electrical systems. A completely unforeseen problem, but it happened.
Okay, that's a little unnerving. But I get the point. You can have the most sophisticated plan in the world, but sometimes it's those little unexpected things that can throw everything off course.
Exactly. So how do we build this margin of safety into our financial lives? Houses suggest several strategies. Save more than you think you need, avoid excessive debt, and, as we've already discussed, diversify your investments.
It's about creating that buffer, that breathing room, so you can handle those inevitable bumps in the road.
Now, we've explored a lot of ground in this deep dive, but one of the most important takeaways from the psychology of money, in my opinion, is this. There are no universally right answers when it comes to personal finance.
It's not a one-size-fits-all kind of thing.
Precisely. What works for one person might be disastrous for another. We all have different goals, values, risk tolerances, and life circumstances.
So it's not about trying to copy someone else's financial strategy. It's about defining your own path.
Absolutely. Take the time to figure out what's truly important to you. What are your financial goals? What level of risk are you comfortable with? What kind of lifestyle do you want to live? Once you have a clear understanding of those things, you can start making financial decisions that align with your values and aspirations.
It's about taking ownership of your financial journey.
Well said.
This has been an incredibly insightful deep dive. We've explored the psychology of wealth, the importance of savings, the power of compounding, the seduction of pessimism, the allure of those can't-miss opportunities, and so much more.
What I find so compelling about Housel's work is that he delves into the human side of money. He recognizes that our financial decisions aren't always rational. We're influenced by emotions, biases, past experiences, and even those stories we tell ourselves about money and success.
It's a refreshingly honest and insightful perspective. So as we wrap things up, what's one final thought you'd like to leave our listener with?
I'd encourage you to take some time to reflect on the narratives you hold about money. Where did those beliefs come from? Are they serving you well, or are they holding you back? Challenge yourself to consider alternative perspective. Maybe even do a little deep dive of your own into those beliefs.
I love that. It's a powerful reminder that our relationship with money is complex and often shaped by forces we might not even be aware of. So to our listener, keep exploring these ideas, keep asking questions, and keep learning. There's always more to discover in the fascinating world of personal finance. And be sure to check out The Psychology of Money by Morgan Housel to dive even deeper into these concepts. Until next time. If you enjoyed this video, don't forget to hit the like button and subscribe. That way you won't miss any of our updates. Also, if you think this video could help others, please share it with them. Thanks for watching and for your support.